Aren't you tired of giving back profits to the market? You need a trading process that provides you with a leading market condition analysis so you can recognize the tops and the bottoms in your portfolio. TechniTrader has been helping traders achieve their profit targets for more than 24 years with a complete trading methodology that you won't find anywhere else. Check out the new online trading courses at technitrader.courses.
Hi everyone, today I want to talk about technical analysis and in particular support and resistance and what that means. It's very important that you understand all of the aspects of technical analysis. A lot of times people will take some candlestick courses or they'll take some technical analysis courses that are very basic, or they will learn about stock indicators and they get so excited because it's an incredible thing to learn about technical analysis, candlesticks, and stock indicators. And they think, oh boy, if I just learn this stock indicator, if I just figure out MACD or stochastics or Elliott waves or whatever, and if I just see some candlesticks, then I can trade the market and I'll be very successful. I'll make lots of money. They get very excited because this is brand new to them. They've never done it before. It's super thrilling to realize that you can actually see what's going on. And so they rush out to start trading before they have the whole process of trading. Those are just a few of the small pieces that you have to put together. There's a whole lot more that you need to learn that most of you haven't learned because you haven't taken a complete course. Maybe your broker offers some quick and easy courses. They want you to trade a lot, so their promotions are all going to be about getting you to trade, day trade. Day trading companies want you to trade all the time because they sell you platforms and they make lots of money on the platforms. So they want you to trade. What I want you to do and what I want you to learn is this. Less is more in the stock market. If you make several $1,000s on a single trade, that is worth a whole lot more than 20 or 30 trades where most of them were losses and you actually ended up with lower capital base. Most of you trade too much. You trade too often because everybody tells you, oh, you have to have your money in the market. You have to have the money in your market. You have to have the money in the market to make money. Well, that's for long-term investing, folks. That's not short-term trading. If you're trading the market short-term, you have to have a completely different perspective. And you have to set aside everything that has to do with long-term investing. The training your broker gives you, the stuff you read online, it's all long-term investing. And some of it has been modified, quote unquote, for short-term trading. When you're a long-term investor, you buy and you hold, and you anticipate the growth over several years. So staying in the market is what you want to do. And being fully invested is what you want to do. With short-term trading, it's entirely different. You have to think of yourself as one of the great predators. Maybe you want to be a bald eagle that's searching for salmon in the sea. Maybe you want to be a hawk that can be high above the fields and see all kinds of mice or whatever. You have to think that you are taking a stance where you're going to sit and wait for the absolute ideal entry point and position. And you get that from support and resistance. It is not enough just to see a candlestick pattern that you've learned in one of your candlestick books or courses and assume that that candlestick means it's going to go up. You not only have to look at your stock indicators to confirm them, but you also have to look at support and resistance in the technical fashion. A lot of you are using a long-term stop loss or a long-term support and resistance analysis when you're trading short-term, and that's why you lose money. Because you're not doing it right, because you don't understand the difference. You're being taught long-term stuff and trying to apply it short-term trading. And that's what the bulk of the internet has out there. It has long-term applications trying to be applied to short-term trading, and it doesn't work. So you have to understand support and resistance. Support and resistance varies depending on which market participant is in that stock at that time. The dark pools provide the strongest support level because they buy incrementally over time in a buy zone. And if that stock moves up and falls back into that buy zone, they're going to start buying again. So that buy zone is a very strong support level. And you can use this for swing trading or momentum trading or even day trading if you're so bold. I don't recommend day trading because you can make a heck of a lot more money swing trading or position trading. Position trading is entering the stock above a dark pool buy zone, just slightly above, and then riding it up, and then another buy zone forms and then it rides up again. As a slower trading style, ideal for people who are really busy. You only have a couple hours to trade a week. Position trading is perfect. It's not positional trading like you learn on the internet. It's entirely different. You take a position and you hold it for a few weeks to a couple of months. And it's highly lucrative. And you can make a lot of money. If you're a long-term investor trying to switch to short-term trading, you should start with position trading and then shift down to swing trading because they're entirely different than long-term. Support and resistance is extremely important in your initial analysis before you enter the stock because it tells you where to place your stop loss under support, and it has to be beneath the support because a lot of times the stock price will drop into that support level, into that buy zone, and won't trigger immediately. So it'll keep going down until the dark pools start buying again. Or if it's pro traders, they may let it sag a little bit before they enter. So it has to be well below. If you're using a percentage stop loss, you are using a long-term investment strategy on a short-term trade. And you'll lose because HFTs know that everybody's using those percentages. They know what those percentages are, and all they have to do is make an algorithm, and they'll just take you out. It's not market makers who are taking you out of your stop losses if you're getting whipsawed out. It's HFTs and other traders and other retail traders. The system is automated. The financial markets are fully automated. So you have to be careful because full automation means things that are universal can be tracked. If several 100,000 short-term retail traders are all trading the same stock and they're all entering on a MACD crossover, HFTs are going to knock you off. They are. They just are. You have to be an independent retail trader, somebody who trades based on the knowledge they have and the style that they want to use and the process that they have to have developed. That's what we do at TechniTrader. We take each individual student and we help you develop your own specific and unique trading style and process based on certain parameters. And that is what makes us unique, is that we do not create cluster orders. Cluster orders is where all retail traders or small funds are all buying at the same time. And when the HFTs see the cluster orders, they just knock them off. So if you're having whipsaws and short-term losses on your trading, it's not the market makers. You are trying to use a long-term investment strategy on a short-term trade. It doesn't work. Short-term support and resistance is very different in swing trading. It's very different in momentum trading. If you have a momentum run, the support and resistance is entirely different than a velocity run. Do you know the difference between a velocity run and a momentum run? Because they're entirely different. Do you know the difference between velocity and volatility? That's completely different too. Technical analysis is more than just a candlestick or a candlestick pattern. It's more than just a MACD crossover or other indicator that you've learned about. It's more than Elliott waves. Just learning the Elliott waves is a great foundation, but it is not enough to be a successful trader. And if you use Elliott waves in a traditional manner, that is now different for the automated market, you will take a lot of small losses. The goal is to not take many small losses. The goal is to trade like a professional. If professionals took as many losses as small lot retail traders do, they would lose their job. They are strategic traders. You want to become a strategic trader. You want to be the hawk, looking at the field below, seeing all the opportunities and picking the best one. Not running out and trading 5 or 10 stocks every single day, hoping that one of them will get you a 20-cent gain. In the end, you're going to lose your capital. Over time, it will erode. You'll lose a little capital and lose a little capital, even if you're trading options, because those options will expire worthless, so you won't be able to sell them, and you'll lose a little, and then you'll have one trade that is a little profitable, and you go, I can learn this. And so you keep trading and trading, and you become even more aggressive, and you tighten up those stop losses because you just figure, well, if I tighten my stop loss, then I will have less risk. I'll have less risk. Wrong! You have more risk. Tighter the stop, the more accurate you have to be. The more precise you must be. If you're using an intraday stop loss, then you have to be precision. You have to know exactly what you're doing, and that takes time and that takes practice. And it's not going to happen overnight or in a couple of weeks, folks. I'm telling you the truth. I know you don't want to hear it. I know you want to hear that this is all super easy and all you have to do is take this little broker online course and voila, you're going to be an instant millionaire. Not going to happen. I have a lot of students who make a lot of money in the stock market who are very successful, but they have developed discipline. They have their own personal trading style and process that they have developed, and they use it religiously without fail. And they have taken the time and they have learned what they need to know to be successful. They haven't been greedy. They haven't been impulsive. They have buckled down and done the work that needs to be done if you want to make this a career. And if you do, we have the training that will get you there if you apply yourself. But this is a partnership. There are no freebies in the financial world. Financial professionals take advantage of you. They call you, sadly, dumb money. And it's because you just want everything handed to you and you want everything to be super easy. And they work really hard. They work diligently and they pay for their information. And they study and they research and they never stop learning. They're always learning about the market. And that's the approach you have to take. Support and resistance is so important because there is different levels. There's different strengths. There's very weak, there's moderate, there's strong, there's very strong. And it all depends on what support you have, gives you information as to whether that stock is a low or high risk entry. Oh, sure, you might see an engulfing white or whatever candlestick pattern you like, or you may see a MACD crossover. That's not enough to make you successful. You have to say, where is the support level? Is the support level close to my entry or is it way far away from it? That's one factor for risk. And then the other factor for risk is how many points can that stock move before it's going to hit resistance for your trading style that will cause either profit taking or a retracement. You can calculate all this stuff before you ever get into the stock. You can calculate what is the actual risk I'm taking because as this stock reverses and goes down, my stop loss is where it's going to hit if I've made a mistake. If you've made a mistake, that's where you're going to be getting out. So if you have several points of risk, then you have a problem. Just tightening the stop and ignoring the support level and saying, oh, well, I'll just make it tighter, and ignoring the support level and going for a super weak support level when you want to hold it for several days, it's just asking to get whipsawed out by the HFTs. You're just telling them, here, have a ball, take my money. You have to have it set at the specific place. Percentage stop losses are for long-term investing. There should be no single one of you using percentages. Not for your stop losses, not for your target gain potential, not for your exit point. These all have to be from technical levels you see on your stock charts. They have to come from the formations of candlesticks that develop over time, and you have to recognize which market participant created that price pattern, because that tells you how strong that support is or how weak that support is, or how strong that resistance is or how weak that resistance is. You have to understand this stuff. It is not enough just to look at candlesticks and learn a few candlesticks or all of them and then a few indicators or just indicators and think that you're going to be successful because you're not. If you want to be successful, you're going to have to learn all the things you need to know. You cannot learn it in a 60-minute webinar here or there. You cannot learn it by reading a dozen articles on the internet. You cannot learn it from your broker because they don't want you to be knowledgeable. They want you to be naive so that you do what they tell you to do. They'll tell you buy this stock. They'll have recommended stocks going out on tweets and twits. They have inventory. They want to offload that inventory. They've already made profit on it. They'll sell it to you and make more money. That's the reality of the situation. And if you want to trade that way, and slowly your capital erodes and erodes and erodes and erodes, and you have less and less capital to trade with, so you're trading with scared money now. So you tighten your losses and then you lose even more. And you only make profits once in a while. So at the end of the year, in tax time, you have a loss and you think, oh boy, I have a loss. So I don't get that. I really don't get that. How can you be content with a loss at the end of the year on your trading account? So that you lower your taxes on your wage earning or your salary? This makes no sense. Why not just not trade at all? Because all you're doing is giving your money to somebody in the financial world. And yet I know so many people who refuse to take the education they need, spend that small amount of money that we charge. We do not charge a lot of money. We're not charging $10,000 and $30,000 and $50,000 like the other guys. If you really get into their program, that's what they're charging. If you learn this, you will have income for 20, 40, 60 years, however long you're in the market, that is exponential. So by taking a little time now, a few months to learn the proper way to do it, you have this lifetime of knowledge. Technical support and resistance is complicated to learn. You have to learn several things. You have to understand the candlestick pattern, the perfection of it, whether it's very tight and controlled or very loose and inconsistent. You have to understand who creates that kind of pattern, who's buying it at that level or selling it at that level. You have to understand strong, weak, moderate support levels and what that means for the trading style you choose. A lot of times somebody wants to position trade and yet they choose a stock that's only good for swing trading. You have to understand these support levels and these resistance levels in order to decide what kind of trading style you're going to use, how long you're going to hold, where is your entry, where is your stop loss, where are you going to get out, and how long is it going to take to do this whole order from entry to exit. You can know all this stuff before you enter the stock, but the only place that teaches this stuff is TechniTrader, because we're only educational. We're not trying to sell you a broker service. We're not trying to sell you a trading platform. We're not trying to get you to mortgage your house so that you can get this big, huge day trading thing. We're trying to educate you so that you can go out with a personalized trading style and process that fits your risk tolerance, your capital base, and your personal goals. When you're armed with all this information and these things, you will be successful. You will be more successful than you think you can be, especially if you've been trying to trade for a long time. I like to have beginners because they have no bad habits, but I do take people who've been trading for a while and are frustrated. And it's on an individual case-by-case basis. We're not selling a canned approach. We're working with each student individually. Every single course is custom built for that student. If you want the best education and if you really want to make a good income from the market or have financial security, and you're ready now to take the plunge because it's going to be very exciting and you're going to blow your mind at what you don't know. Come visit us at TechniTrader. Look at the course pages. Open the outlines and read them and see what they are. And then when you're ready and you have questions, give us a call so that we can properly guide you and make sure that your selection is ideal for you and anything that we need to add to the course can be added so that you will have everything you need to be successful in the market. That's what we do. Nobody else, no other company anywhere does what we do. Try us out. Take the chance because it will change your life. TechniTrader changes people's lives one student at a time because each student is unique to us. And we are dedicated to helping the retail trader become financially successful. I'm Martha Stokes, and that's the radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.